Let's get across the market open now. Peter Maguire joining us from trading.com. Pete, happy Monday to you as we get going on this Monday. What are you looking for? Because we sort of, obviously the focus being very much on those increased tensions in the Middle East, but it looks as though the markets are shrugging that off.
Well, good morning, Andrew. Yeah, well, it's up 3% for as far as crude this morning. So I'm thinking it's going to be, again, it's protracted. We think it's going to be put to bed and everything's right. And then all of a sudden it reappears. Is this going to be a start of a longer conflict in the sense of the intensification? What's Iran doing? What's the counter moves going to be? The market seems to be, well, in commodity markets, they're bid up, and what impact that's going to have naturally to futures today and across to US dollar and so on. So yeah, it's a fairly big week. We've got also Kevin Warsh on Tuesday, and CPI numbers going to materialise and see how they produce as far as sentiment.
We had a quick look at where Wall Street finished up there. In fact, mostly higher for the week. The S&P 500 pretty close to a record high. Just refocusing on what we're seeing in oil markets at the moment, Pete. So this is also affecting inflation expectations potentially to what the Fed may well do. You mentioned Kevin Warsh. There is still that risk that the next move is going to be up.
Yes, exactly. I mean, these moves in the sense of higher energy prices is not what the Trump administration want. Naturally, higher CPI and that the impact of that, Andrew, was naturally, a rate hike of some description. With whether it's going to be in September or it's going to be pushed further out, we're waiting to see what Kevin Warsh says. And the CPI numbers dropped 90 minutes before his testimony in front of Congress, which is Tuesday. So if they're better than expected, then that's going to be a good sign. If they're worse, then these are all issues that I think he's going to have to naturally not only address, but what's going to be the time frame as far as rate sensitivity, guidance moving forward, and Fed fund futures are the real number that everyone's got their eye very much focused on.
How's this playing out for currencies? What are we seeing with the US dollar at the moment, Pete?
101.14, Andrew. It's bid up. Interest rates are high. We've got a 4.56 for a 10-year. We've got a 4.21 for a 2-year. We're at 101.14 sort of number for US dollar. We had a high over the last 52 weeks at about 101.80, I think it was. So we're still short of that, but I feel as though the momentum will be pushed up. Currencies are flattish. There doesn't seem to be a lot of movement. We're at a 113.80 sort of number for euro. Yen still, what's the issue there? Are we going to see intervention from the BOJ? Pounds flat. Aussie dollars a 69 handle. So I'm thinking US dollar will have a little bit further move to the upside. And that's the storyline at the moment.
I also see you point out that you're saying low gold volatility favouring US equities on the upside there. What are you seeing?
Well, it all comes down to as far as probabilities, and we put together a paper, and it was very much to do with volatility from across currencies and gold and the impact it's going to have. And when you look at long-term projections, Andrew, the gold market has been fairly flat. This could push the S&P 500 up to 7,800, could be the sort of number, and we're expecting that possibly to happen over the next months. So the impact is going to be, again, consolidation, very, very minor moves as far as currencies. And I think the energy is going to be very much focused on US equities and that continued bull market. So, you look at numbers, you dissect them, and that's what, analysts do, and they look for opportunity.
Now, overall, when you look, obviously halfway through the year, new financial year here in Australia, what are you seeing with asset volatility at the moment? In fact, I think we've got a chart we can go to just to express what you're seeing here.
Yeah, well, when you're thinking as far as assets, some assets are performing very well, some are, performing poorly. We look at the gold market, for instance, back from 5,400, Andrew, down to 4,100. So you've got to say, it's had a significant sell-off over the last 6 to probably 7 months. US equities have continued a very strong rally to the upside. Currencies have been very, very quiet. And so then you're looking at the opportunities as far as continuation from softness or very minor moves in some of those asset classes where the growth frontier is going to be come the end of Q3 naturally. We've got reporting season and then moving very much into Q4, and you've got a midterm election in the States. Is there going to be, and some people are saying from a political interference standpoint, a rate hike, or is it going to be, drawn out further and it'll be after that and probably be in, late November or December? So again, it's a very dynamic time period over the next 4 months and how that looks across the asset classes and opportunities.
And we should also focus, obviously, on Friday. We did get the debut of the South Korean firm SK Hynix on the Nasdaq. Yeah. Pretty impressive moves there. Once again, I guess illustrating that AI trade very much alive and well.
You betcha. AI it's been just incredible. And when you're looking at some of those semiconductors out of South Korea and Taiwan, it's just been enormous and pushes to the upside. The Samsungs, as you said, SK Hynix, just mind-blowing moves. And you keep an eye on the Kosdaq out of South Korea and naturally the Kospi 50. Keep an eye on the Nikkei 225. It's our time zone, and you can just big moves that we've seen, and whether that's going to be a continuance over the next couple of quarters, I'm saying probably yes, but there's always inflection points. But yeah, to be in the States now and to give traders that opportunity, far more exposure, it's going to be again dynamic times for that whole sector.
Pete, locally, what are you looking for this week?
Well, I'm looking, where I don't see a lot of movement across the currency complex, Andrew. That 69 handle. I want to keep a close eye as far as what New Zealand's prepared to do. If there's any rumblings from, naturally central banks and the likelihood as far as Kevin Warsh, the impact that's going to be. And I think that's going to be felt globally, his projections and how his testimony in front of Congress, what that looks like, smells like, and tastes like, and the natural impact that's going to have to currency markets and commodity markets, but more importantly, the bond market.